offers jobs day like Bloomberg.
We are moments away from the start of the cash trade. This is Bloomberg Open Interest. I'm Matt Miller. We saw a real turnaround in futures this morning. We were headed up. We're still on track for a weekly gain, big weekly gain, but we do see futures now lower. S&P futures off about 1/3%, a little more. NASDAQ futures also off about that much. There you hear the opening bells on the New York Stock Exchange. You've got what looks like Q2 ringing the opening bell, and on the NASDAQ, Smokey the Bear, 80th birthday. That's excellent. He's quite young, actually. I would have imagined he was older. Only you can prevent forest fires. Let's get a quick check on the major averages this morning as we kick off the session here. S&P 500 down about 1/4% right now. NASDAQ 100, so the bigger tech stocks, down 0.5%. The small caps on the Russell 2000 down a little bit less than 1/4%. One of the stocks that we're watching at the open is H&R Block. Earnings there beat estimates in the fiscal fourth quarter. H&R Block announced a $1.5 billion share buyback as well as a 17% dividend increase. So giving money, returning cash to shareholders, that's what the market likes to see. There you can see the full quote. Let's get over to Katie Greifeld right now. Katie, what are you watching?
Yeah, not as rosy if you take a look at Applied Materials. We were just talking about this with Ed Ludlow. Of course, the chipmaker sales forecast, it came in line with estimates. That's good news, but the bar was really high. Shareholders clearly looking for bigger returns on the AI investment. Shares currently off about 4% just a couple seconds into the cash trade. We also want to take a look at NVIDIA this week because the stock rose by more than 12%, of course, lifting the S&P 500. Lifting the NASDAQ, also bringing the company's market value above the $3 trillion mark. Let's take a closer look now with Bloomberg's Abigail Doolittle.
Yeah, lots of rally action this week, Katie, for big tech and the markets overall right now. Yesterday, actually, I should say, we had these indexes up 6 days in a row. But take a look at tech on the week. Supermicrocomputer gaining 22%, basically in a bull market after having dropped in a bear market. NVIDIA, I don't know whether or not it's still in a bear market. I suspect it's not, but the degree of the bear market, probably this stock may still be in a correction from its peak. We'll be taking a look at that chart in the 10 o'clock hour. Micron up 14%, Broadcom. So you see this broad rebound for the chip space as investors are buying the dip from that big sell-off induced in part by too far, too fast, the yen carry trade. Let's take a look at technology relative to the other sectors because we are going to see this massive outperformance, up 8%, the best week since 2022. Discretionary. There's also some big tech in there. Financials, healthcare, and then you can see that the more dividend-oriented, rates-oriented sectors on bottom, real estate and utilities, not even up 1%. So big outperformance for tech. One question, though, is will it last? There are some similarities to the monthly chart of the NASDAQ 100 to 2022 out of the 2020 pandemic low. You can see this big rally. The RSI overbought for a period of time, but then it started to cross it lower. It didn't happen all in one stroke in 2022. It took some time. Well, take a look at this massive rally that we've had for the NASDAQ 100. Interestingly, similar to into 2022, the trend reversing. The point of a trend line is not to see the trend, it's to see when it reverses. The RSI starting to come out of overbought. It suggests at some point, Matt, that the big tech strength that we've had this week, well, that may not be the case.
It's amazing how overbought it was, though, Abigail, in 2022. And we were talking this morning with Christina Hooper of Invesco. She mentioned the RSI as well. We're not quite there yet, right, where we were in that last big rally.
Yeah, we're not there, and it's unlikely that we will be. So that was truly overbought, to your point, between in June of 2021 into 2022. Right now, we were right above 70, now at 69, which really points to the uncertainty. Not quite as robust here, but still a pretty tremendous rally. Last year, the first half for the NASDAQ 100 up 40%. That was the best first half for the NASDAQ 100 ever. So lots of steam rising there, and now it seems to be evaporating a little bit. It's going to be interesting to see whether or not we have something similar to what did happen in 2022. All
right, we'll definitely keep our eye on it. Abby, thanks so much. Abigail Doolittle taking you through the technicals. Let's bring in Linda Dissel right now, Senior Equity Strategist at Federated Hermes. Linda, we've seen an incredible bounce back from the Manic Monday that we had last week. What are you doing right now? I mean, I think a lot of people used that drop to get back into tech stocks that they'd sold off. At least the 13F showed us that a lot of big hedge funds had taken some profits. Where are you positioned?
Well, good morning. Thanks for having me. The VIX that spiked was a kind of a rare spike. It was an extremely rare decline from that spike. And history suggests that when the VIX goes spikes like that, you should expect some more tremors before you think you're out of the woods. So we're suggesting still that, even though it's all over the map as to whether this carry trade is over, your commentary about what's going on in the technology sector is very interesting. And like it seems like every quarter we need to bite our nails as we wait and see what NVIDIA tells us in terms of their earnings and their outlook. And that can also just on its own be a time to pull back yet again. So we think we're still going to have some volatile months now.
Yeah, NVIDIA doesn't report until August 28th after market. That certainly will be a lot of fun. But let's go back to the carry trade, the nebulous carry trade that we've been talking about. It's extremely technical in nature. It's not going to alter the fundamentals of an NVIDIA, for example. And Linda, with that in mind, if we do see more volatility around the carry trade, fears of that unwind, is that a time to really buy that dip?
Well, again, the numbers as to how far we are through the unwind of this carry trade are all over the map. So it's hard to really suggest that that bit of it is done. It's probably largely done, but because these names, these technology names are so widely owned all around the world, it's hard to believe that, one couple of day trade is, you're done. It's really hard to believe that. And it seems impossible for the experts to really pin down whether it is, which is why I bring up earnings season anyway. Regardless whether people bought on the dip or not, people still heavily invested in the large caps tech sector, which we like, and we like the broadening of the market. We're simply suggesting that more volatility is likely to come as people are on edge, traders are on edge. It's the summertime trading environment and the like.
How confident are you? I mean, this earnings season has been very strong, 11, 12, 13% growth in terms of profits, and the rest of the S&P, after you take out the mega cap stocks, which has been in an earnings recession for the last 6 quarters, is finally turning a profit. Do you expect that broadening to continue in the second half?
Well, yeah, it's very, very interesting. The broadening is such a great thing to see because it gives you more confidence that it's not just a handful of names. And indeed, it's been a much stronger second quarter than many thought. We've suggested that we're going to watch profit margins and see what the guidance is. So the guidance that came out of the second quarter, you saw a more broadening of companies reducing their guidance. You see a more broadening of companies raising their profit margins. 2/3 of the companies had profit margins up in the second quarter, which is great news. But you've seen for third quarter earnings per share expectations a broadening of bringing that down. So it could be kind of a pivot moment potentially, or at least let's not get too excited to continue to extrapolate. It's just one of those things. It's much like the jobs market. Are we having a problem or not in the jobs market? Are we having a problem or not in the retail sales environment? Things are staying stronger for longer, but we're all just biting our nails for the flip over. And third quarter will be interesting.
Mm-hmm. Yeah, well, that's where I wanted to go. And you talk about this nail bite moment. I wonder if we're seeing the high water mark, because already you're starting to see some Q3 estimates come down for earnings, depending on which measure you look at.
Yes, indeed. Depending on what number you look at, the earnings figures for the second quarter were 11, 12%, and that's being brought down to 6%, maybe when all is said and done, maybe 8%, but a decrease to be sure. So we are expecting that more of this concern will start to eke its way out into the into the various parts of our economy and our markets. But still, we think, look, we have a 55-20 figure for this year end in the S&P, and that's where we're at right now. That argues for continued volatility on the downside, strength after the election, and we have a 6,000 target for next year. So a broadening of a slowing but still no recession is kind of our bottom line.
All right, Linda, that's a good place to leave it. Really appreciate you taking the time. That is Linda Dissel. She is Federated Hermes Senior Equity Strategist. Have a great weekend. Now, coming up, with Mpox being declared a health emergency, we speak to Dr. Seth Lederman. He is the CEO of Tomix Pharmaceuticals, which has a vaccine candidate for the virus. That conversation coming up next. This is Bloomberg.
All right, let's take a look at what's going on in the market right now. Just about 13 minutes into the trade, we are still down only about 0.1% on the S&P 500. We had been up this morning. And then housing starts came out in a disappointing way, building permits as well. And as a result, we turned around. The NASDAQ 100, the big cap tech stocks, are lower right now, and the Russell 2000 is gaining. So a little bit of a rotation this morning, Katie.
A tiny rotation. We'll see if it can build a little bit, but it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Wells Fargo going all in on Fox with a double upgrade from sell to buy. The analyst attributing his bullish call to the company's sports streaming opportunities. Next up, Bank of America says that Estee Lauder no longer a buy. The firm downgrading the beauty giant and cutting its price target by $40. The analyst cites weaker than expected performance in China. And finally, TD Cowen cautioning investors on Bumble as it cuts its buy rating on the online dating site. The analyst cites an uncertain path to recovery thanks to fewer users, the lack of other portfolio brands, and broader challenges in the online dating space, Matt.
All right, let's get to an issue that has been popping up on the most read for the last few days, and that is Mpox. The World Health Organization has declared the fast-spreading Mpox outbreak in Africa a global health emergency, and now as the variant changes, it leads to more challenges trying to contain it. The Director General spoke about his concerns.
WHO has been working on the Mpox outbreak in Africa and raising the alarm that this is something that should concern us all. The emergency committee met and advised me that, in its view, the situation constitutes a public health emergency of international concern.
Joining us now is Dr. Seth Lederman, CEO of Tonix Pharmaceuticals, which has a vaccine in development for the virus. Doctor, really appreciate your time this morning. Tell us about this vaccine. I believe it's not in human testing yet. So is it likely that you get it through testing and out in time, I should say, to contain this virus?
Yes. First of all, thank you for having me on. We've done advanced animal testing, and we're ready to start manufacturing. And we are glad that WHO has declared Mpox a global health emergency of international concern. Our vaccine at Tonix is a live virus vaccine, and that allows us to vaccinate potentially many more people to lower cost. And we think it has the capability of making an impact on public health.
And how long do you see the threat of Mpox remaining? And I mean, extrapolating that out, how big do you think the market could potentially become here?
Well, it's frightening to think about it, but 2 years ago was the most recent public health emergency involving Mpox. And in that, 32,000 Americans have become infected, and it's now endemic in the United States. But this new strain, Clade 1b, which, by the way, was first detected outside of Africa in Sweden yesterday, is expected to come to the United States. This is believed to be more contagious than the Clade 2 that infected 32,000 Americans in the past 2 years, and also approximately 20 times more lethal.
I remember when we were at the start of the COVID outbreak, and Angela Merkel, the Chancellor of Germany at the time, said she thought 60 to 70% of the population could get it, and that sounded insane. Of course, now we've all gotten it. Can Mpox get this bad?
Well, we're still learning about the transmissibility of this Clade 1b variant, but it does seem to be more transmissible than the Clade 2 variant. In the United States, the Clade 2 variant was mostly restricted to men who have sex with men. But in Africa, monkeypox, about 50% of the deaths are in children. So this is not technically a venereal disease, but it is transmitted by contact and also potentially by aerosol. So I can't guess right now how widespread it will become in the United States, but it is hard to imagine that it won't spread in the United States. And in fact, we really don't know. The HHS said yesterday they don't believe the Clade 2, Clade 1b is in the United States yet, but we did, as far as I know, the CDC is not actively testing.
And I want to talk a little bit more about your specific vaccine and the trial that's underway. What type of trial is this, and when might we expect results to be published?
Right. So we haven't started a trial yet. Now we're reinvigorating our efforts because, frankly, interest in Mpox was maintained at Tonix, but not by health authorities or investors. So we're ready to jump on and get going again. But the difference is that ours is a live virus vaccine. It's a modern form. We call it a fourth generation, similar to the vaccine that Edward Jenner introduced in 1800, but we believe with much better tolerability profile, much better, 10,000-fold in animals. And this, when Jenner's vaccine was used to prevent smallpox all over the world, that actually kept Mpox out of the human population. So we think from a public health point of view, a live virus vaccine has the ability to block forward transmission and to be work with only one dose. And that's a big advantage, both in the United States and other countries.
Well, Doctor, we'll definitely keep an eye out for that trial start. Really appreciate you taking the time today to walk us through it. That, of course, is Tonix CEO Dr. Seth Lederman. Now coming up, best known for buy now, pay later loans, the fintech firm Klarna eyeing an IPO. More details next in our Wall Street Beat. This is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on where stocks are trading at the moment. Right now, the S&P 500 getting towards little change, getting towards unch. We had been up about 0.5% on futures, then down 0.5% after the housing starts came out, and now we're looking very little change here, but still up bigly for the week. The NASDAQ 100 down about 0.3%, the Russell 2000 gaining. The S&P has been on quite a tear this week since it had such a disappointing Monday last week. Then it was unchanged at the end of the week. Right now we're up 3.6% for the week.
And we do have, of course, some data coming at the top of the hour. University of Michigan sentiment coming out. Of course, we're moving on every single data point. Right now, it'll be interesting to see what happens. But it's time now for our Wall Street Beat. Swedish fintech Klarna is setting the stage to be one of the biggest U.S. IPOs of 2025. The CEO joined Bloomberg earlier this morning about the company's future.
We're probably going to hit over $1 billion in revenue in the U.S. pretty soon. So, and that has obviously made sure that we are doubling down our efforts to accelerate rolling out new services in the U.S. as well. But especially when you talk about things like bank license, it does take some time, right? They took us a few years to get our European banking license, so we don't want to make the dependency on the IPO to that.
And for more on Klarna's growth and their plans, I'm thrilled to say we're joined now by Bloomberg's Bailey Lipschultz, who covers IPOs and everything else. And Bailey, you're on set on a Friday, which is a treat in and of itself.
You're in the office
I'm
on
in the
Friday.
Well, I'm co-hosting Bloomberg Radio from 10 to noon, so if you get bored of this,
with Alex Steele?
With Alex Steele, yeah.
Oh, you're a lucky guy. Well, you have about 7 minutes, 6.5 minutes here. Tell us a little bit about Klarna and their plans. Does 2025 sound realistic?
I mean, it could be. When I talk to bankers, though, 2025 is kind of being chalked up to a lost year in the sense that you're coming out of the August lull. If you want to go public, you have to do it after Labor Day. You're really kind of threading the needle between that and the U.S. election. Do you want to go right before Thanksgiving, or do you want to try to, again, Thanksgiving this year is on November 28th, so when you look at the calendar, it's pretty choppy. So the bulk of activity when I talk to bankers and executives and investors is likely going to happen in the March to May timeframe next year.
So it's less likely, in your opinion, that they actually go in 2025, but they'll be big, right?
They're big.
I imagine if it's one of the biggest U.S. IPOs, that means it's going to be one of the biggest global IPOs.
It would be. We don't know what the logic or thinking could be, but right now we're seeing in Bloomberg's reported Klarna could target a valuation of $20 billion. So if you kind of slice and dice how many shares they offer and kind of what they want that float to be, that'll be interesting. But when you got to look at this company, you got to keep in mind, they did a funding round in 2022 at $6.7 billion. That was a sharp drop from $45.6 billion. So what this logic looks like, what the thinking looks like, what the messaging from the company and from bankers, kind of how that plays out when you, at least from a public investing standpoint, your best comp is Affirm, which is down more than 80% from its 2021 peak.
So we're going to continue to keep an eye on Klarna here, but let's talk a little bit more about the end of this year. Like you said, a lot of difficult needles to thread there between, all the holidays, the election, et cetera, et cetera. Is anyone else notable expected in the pipeline for the rest of this year?
We've reported names, the likes of a StubHub, the likes of an Ingram Micro. It's going to be interesting to see kind of what the receptivity is of investors when we get closer to potentially launching those IPOs, but it really feels like the others, the insurance names, the healthcare names, that's really what's going to make up the bulk of the post-Labor Day window.
All right. Bailey, thanks very much for joining us. Look forward to your radio show from 10 to 12 on Bloomberg Radio with Alex Steele. I want to take a look at gold. Let's take a longer-term look at gold because the intraday chart is going to show you a little rise to 24.96. 2,500 is the level that it hit just a few minutes ago. And here's a one-year chart. This shows the incredible climb that we've seen in gold at a time when, especially in the last half of the year when Bitcoin really didn't help during the Manic Monday, flash crash, gold continued to remain steady.
There's your hedge right there.
Coming up in the next hour, Liz Ann Saunders joins us of Charles Schwab. We're also going to talk to Evite CEO Ann Defoe. Stick with us on Open Interest. This is Bloomberg.
like Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Katie Greifeld. Sonali Basak is off today. And coming up on this program, stocks on course for their best week this year, but a weak reading on the housing market derailing that rally today. We'll get consumer sentiment data in just a few moments. And caution from Austan Goolsbee. The Chicago Fed president says that the labor market and some leading indicators on the economy starting to flash some warning signs. And Kamala Harris will unveil her economic proposals at a rally in North Carolina today. We've got the details on her eco agenda, Matt.
Let's get a check on what the markets are doing today. We saw the look for the week. They're still up 3.5% for the week, at least the S&P is, but unchanged right now. And this data that you see at the bottom of your screen has the potential to change. Any economic data point has the potential to change the direction of the markets these days. It's breaking. You see it there. University of Michigan sentiment a little bit better than expected out of consumers, 67.8. We were looking for 66.9. Current conditions, a little bit worse, 60.9. We were looking for 63.1. And then the inflation expectations, which I find interesting, a little bit higher 1 year, 2.9%, and 5 to 10 years, 3%. We're looking for 2.8 and 2.9% respectively. So
all right.
Let's wrap our heads around this data. How shall we do that, Katie?
Let's do it with Mike McKee. Of course, he is our chief international economics and policy correspondent. He's sitting right to my left before, of course, he goes to Jackson Hole next week. What do you make of these numbers?
They're pretty much in line with what we have seen. Now, the interesting question about the numbers and the current conditions index is that the previous Michigan survey did not capture the change from Biden to Harris. And there's been a lot of talk about people feeling better with Biden out of the race, and it doesn't seem to have affected people's views of the current economy, although we do see a rise in expectations. Whether that's related to the politics or not, hard to tell. For the Fed, no change in the inflation expectations. That's good news, just fits into the narrative that they can continue moving towards rate cuts.
They've been winning the big game lately against Ohio State, but Mike Wilson kind of poo-pooed the data, saying, you know, it's inversely correlated to inflation, so he didn't seem to really care that much about it. How important is this to the Fed?
Well, the inflation expectations data is important to the Fed, along with what you get in the markets when you're looking at the various inflation measures, tips or swaps or whatever, because they want to make sure that inflation doesn't get ingrained. And the idea is that if people expect inflation to be higher, it will get higher because they will take actions to try to make more money or do something to offset that. So they keep an eye on it. It's been tame, and they've taken credit for keeping expectations in check, which they believe is because of their credibility on inflation. People believed they would raise interest rates, which they did. So they're relatively happy with this. In terms of the overall sentiment numbers, they don't bear a lot of relation to what people are going to do in terms of spending. Alan Greenspan's famous line, we watch what they do, not what they say.
Right, that's an important one there. The S&P 500, though, erasing declines right now. We're back to unchanged. Before we let you go, I do want to talk about Jackson Hole. Of course, all the central bankers gathering in Western America, in the mountains. They always tend to make news out there. What might the headlines from this year's Jackson Hole meeting be?
I think they're going to be relatively tame. Jay Powell's going to get all the attention for his Friday speech, but when you think about what he can say, it's probably going to be, we've had more inflation data that is good news and keeps us on track, and maybe at some point soon we can start cutting interest rates. But he doesn't want to lock that in because there is still data to come, another CPI, a jobs report, etc. And then all the other Fed officials out there who are talking, and not all of them do, but they will probably say much the same. Austan Goolsbee seems to be now trying to set people up for maybe a dovish move in September. In other words, they cut rates, but they don't promise to cut rates again right away, or they do promise to cut rates again right away because he thinks they're going to need it. But beyond that, I don't think you get a whole lot out of it. I know Bill Dudley had a column today suggesting Jay Powell might talk about the framework review, but that doesn't start until the fall, so I don't think he'll front run.
One thing I want to get out of it is I know that the surveillance is going to Jackson Hole, right? I want to see John Farrow in a cowboy hat and boots at the $1 Million Cowboy Bar. Can you make it happen?
I think John is staying here. I think it's just Tom and Lisa that are going.
Tom and Lisa that are going. And last year, Tom went to the $1 Million Cowboy Bar in his suit and bow tie.
He looked amazing.
Let's put it this way. Nobody was confused about who Tom Keene was in that bar.
I'm sure he's a celebrity there. Michael McKee, thanks very much for joining us. Be sure to tune in to Bloomberg for special coverage from Jackson Hole. Fed Chair Jerome Powell will speak on the U.S. economic outlook next Friday. We will bring you that live. Unfortunately, no Pharaoh in a cowboy hat. We're joined now by Liz Ann Sonders, Charles Schwab, Chief Investment Strategist. Liz Ann, it's been pretty crazy couple of weeks here after, the non-farm payrolls miss and then the Manic Monday. We've been, for the most part, off to the races because I guess we're no longer scared on the growth side anymore. What's your take on these markets?
Yeah, I think for now we did move into a mode of good news is good news. And you're right, it was in the aftermath of the non-farm payrolls report. And I think that's increasingly important in the labor market because the Fed has essentially told us that they haven't put the inflation data in the rearview mirror, but the labor market data is coming into sharper focus. And I think decision making around when they start, which is likely to be September, how aggressively they move, will be at least as much driven by what goes on in the labor market as what we're seeing in the inflation data. So, but I also think, as we've seen on a day like today, where you've got weaker housing data versus yesterday, where we had stronger retail sales data, is we are still dealing with cross currents in the economy. This is not a straight line in either direction. And when we start to cheer that, okay, the news is Goldilocks, like, you kind of get hit with something in the opposite direction.
And is that really the laser focus of this market right now, what's going on in the economy? Because we have all these earnings, we talk about them ad nauseum, and it seems like, at least at the index level, it's really the economic data that is just driving all the movement right now.
It is the economic data because of elevated concerns about recession. I think that was exacerbated through a couple of things. Frog in the throat. Number one, you had the fund manager survey come out from B of A suggesting that fund managers now have recession as their greatest concern. You had the intraday move in the yield curve back into positive territory. A lot of people think that it's the inversion of the yield curve that is kind of the recession warning. That's more the recession watch, and the uninversion is the recession warning. Now, it was only intraday, and it came back down again, but you add that to the weaker jobs report, I think the economy is in sharper focus. And as it relates to earnings, second quarter was stronger than expected right now, running on a blended rate at about 12 or 13%. But throughout the reporting of second quarter, we were seeing a diminution to expectations for the third quarter, and expectations now are for a growth rate about half of that. You add in the concerns about the cost side versus revenue side of AI, and I think we're likely to see some more bouts of volatility, including some periods of calm.
Yeah, so second quarter earnings, it feels like they were good enough that we could basically ignore them.
They were great.
They were okay.
12 or 13%?
They were pretty
The end of an earnings recession for the rest of the S&P?
Yeah, but as we were talking about with Linda Dissel, maybe the inflection point there, you think about third quarter estimates, and that's where I want to go, Liz Ann. They're starting to come down, even though we're really focused on the economy right now. If we did start to see a deterioration in the earnings picture, I mean, would that take over as being the zeitgeist?
Yeah, probably. We did through the corrective phase, which didn't quite get there on the S&P. We did on the NASDAQ, and up the cap spectrum into areas like the Magnificent Seven. You were more in the 15% drawdown during the recent pullback phase. That didn't do a heck of a lot to ease some of the valuation concerns. And the hope, of course, has been, especially in light of stronger than expected second quarter earnings, that you would see earnings play catch up to what has happened to valuations. Now, valuations have come down a nudge, but now we have that rolling over and a bit of deterioration, not into negative territory for the third quarter, but that narrative has changed a little bit because we're not going to see earnings catch up to some of that valuation expansion as quickly as many would have hoped.
Before last week, we were so focused on the presidential election as it relates to markets. It seems like the idea of a Trump trade or the importance of that has flown out the window. How focused are you? How focused are your clients on, November?
They're focused on it just in terms of the amount of uncertainty. What we're hearing a lot is concerns about a close and or contested election and what that would mean for volatility in the post-election period of time. One of the things that we always cautious investors around is not to try to trade the market based on potential election outcomes. It certainly happens. There's a lot of trading that gets done in terms of sectors that might be seen as beneficiaries or get hurt by policy, but there's not yet been a lot of policy discussion. So I'm not sure that's such a big driver at this point, but I think it is a sort of a fool's errand to try to play the trading game leading into an election, especially in advance of knowing whether we're likely to have a divided Congress, what the majorities will be, because what gets discussed on the campaign trail and what can actually be implemented, there can be a yawning gap between those two, obviously.
Yeah, and of course, it's anyone's guess to see what actually happens in November if you take a look at the polling. I do want to talk to you a little bit about the carry trade before we let you go. We've been debating how much it actually matters. And from your standpoint, where you're sitting now, what's your view, whether or not we're done with the bulk of the unwind? And even if we aren't, what are the long-term implications of that?
So, it's hard to assess what portion of the yen carry trade has been unwound. I suppose JP Morgan is as good a source as any, and it was, I believe, last Thursday when they came out and said it was probably 3/4 of the way unwound, and that provided significant support for the market. And you saw that, ripper of a rally. My colleague Jeff Kleintop, who is our international strategist, thinks that, that's probably around in line, meaning essentially the majority of it has been unwound. But you could see carry trades get put on again. And then you've had the ripple effects, because when you look at correlations and you look at the last week's unwind of the carry trade and the commensurate hit to areas like the Magnificent Seven, it's easy to infer that a lot of that money via the yen carry trade went into some of those high beta, mega cap, tech, AI kind of areas. We just think that any additional volatility associated with the yen carry trade might not be as disruptive as like what we saw last Monday, where you had, a lot of people don't realize that in terms of the VIX, you had the largest ever intraday surge in the VIX. That same day, you had the largest ever intraday decline in the VIX, all in one day. By the end of the week, it was sort of ho-hum. If you were only looking on a weekly basis, it was sort of a nothing to see here, but the intraday swings were wild. We don't think that kind of action is likely in the near term.
Yeah, a lot of fun, but pretty wild, I guess, if you're actually trading it. Charles Schwab, Chief Investment Strategist, Liz Ann Sonders, great to speak with you. Meanwhile, I take a look at these markets right now. The S&P 500 back to flat. Their small caps up about 0.5%. Let's take a look at what's moving underneath the surface right now with Abigail Doolittle.
And quite a bit is moving beneath the surface. Let's start off with some analyst moves, starting off with the shares of 21st Century Fox, up 1.8%. This, as Wells Fargo has double upgraded the stock from underperform to outperform, basically on sports streaming, saying that this is really a big opportunity, that even potentially it could just move right into ESPN investors liking this analysis. Nike up about 0.8%. Williams Trading upgraded the shares to a buy from a sell, so a pretty strong call there as well. They like the recent rehire of Tom Petty as head of U.S. wholesale. In the last quarter, there was a lot of negative information about inventory basically stuck in the channels. So apparently Williams Trading believes that Tom Petty will be able to take care of that issue, and that stock has been under pressure on the year. Last time I looked, down more than 20%, but today it is higher. As for what's helping out from the big point standpoint, Tesla up 2.4%, back above its 50-day moving average. I would say some technical buying there. It's not clear if it'll stay above there. Alphabet trying to move above, I think it is, or bounce off of its 100-day moving average, so more technical trading. And Netflix up a healthy 1.3%. On the downside, however, we do have Microsoft stock trading lower, and in some of those 13Fs, it did come out that Leon Cooperman has slashed his Microsoft holding. The stock right now down about 0.6%. Meta Platforms down more, down 1.5%. And then, of course, on earnings, we have Applied Materials, the semi-cap equipment company, so the machinery that makes chips. This stock is down. Interestingly, Matt, the quarter was fine, the guidance was fine, but the guidance underwhelmed because it was only in line. Investors wanted more on AI demand. They didn't get it, and the stock is down by nearly 3%.
Tom Petty. I miss that guy. You like Tom Petty?
I don't think it's that Tom Petty. It's Tom Petty, P-E-D-D-I.
No, I know it's a different one, but the other one is the one I know.
Yeah.
I'm sure this Tom Petty is also
great guy.
a fantastic operator.
Probably.
Probably not as good a musician, songwriter.
Few are.
Yeah. All right, coming up, Kamala Harris makes her economic policy pitch to voters today, including subsidies for first-time home buyers as much as $25,000, parents as much as $6,000 for a newborn, and low-income Americans. This is Bloomberg. Let's get now to high interest, look at what's making headlines around the world. JetBlue's third biggest shareholder isn't an institutional investor or an activist or even a famous meme trader. He's just a regular guy trying to make a buck. One man's expensive side hobby is quietly building a stake in the money-losing airline. His 8.1% of the company is worth $132 million, roughly on par with Carl Icahn's stake. It's a great story on the Bloomberg terminal. I recommend you check it out. Republican nominee Donald Trump isn't pulling any punches in this race for the White House. Here's what he had to say on his strategy of personal insults against Vice President Kamala Harris.
As far as the personal attacks, I'm very angry at her that she'd weaponized the justice system against me and other people. Very angry at her. I think I'm entitled to personal attacks. I don't have a lot of respect for her.
Staying on the Trump campaign, in addition to the return of Corey Lewandowski and Dan Murtaugh, the former president has picked the leaders of his transition, Linda McMahon of World Wrestling Federation fame and Howard Lutnick of Cantor Fitzgerald will co-chair Trump's transition team should he win his bid to return to the White House. Here's what Lutnick said about Trump's campaign on our show last month.
he needs money, right? It's a race now. It's a hot race now, and Donald Trump needs the fundraising, and I'm trying to help every way I can.
And on the campaign trail today, Kamala Harris will lay out her economic agenda in North Carolina. It includes federal subsidies for parents, home buyers, low-income Americans, as well as new programs to curb increases in rent and grocery prices. Let's discuss all of it with Bloomberg's chief political correspondent, Anne-Marie Hord-Dern. And we've been asking for details on what her policies might actually look like, what that portfolio could be. And less than 3 months ago, we're starting to get it.
Right, but we're just getting the top line. So I think what you're not going to see from this campaign just yet is actually the details on how some of this would actually come to fruition, especially when you talk about big subsidies that would require going into the tax code and editing the tax code. You need congressional approval. You cannot just do this unilaterally from the White House. But what it does say, and it's a clear message, is that she has the high cost of living in mind. This campaign, before they even go into the DNC, a really big, important political message they are sending is, we actually hear you. We understand high cost of living is a huge problem for you, and you're unhappy with the current economic status. So basically what they're doing is they have this idea about price gouging, which a lot of economists have basically rolled their eyes about, but it's getting a message to the American voter that we understand your grocery bills may be too high. We understand that you can't get on the property ladder with this $25,000 subsidy for first-time buyers, and then, of course, the expense of having children, the child tax credit. That's something that actually may have bipartisan support, though, because we also heard Ohio Senator and VP pick for Donald Trump, J.D. Vance, talk about.
Yeah, she wants to raise it to $3,600 per child, $6,000 if it's a newborn. I think Vance wants to raise it even higher. $5,000. The interesting thing is, so on the one hand, she's taking a lot of platforms from Donald Trump's, planks from Donald Trump's platform, right?
It's a populist message on both sides.
Exactly. But Trump isn't taking advantage of, Biden's failure, if you will, on the economy. He would rather just insult Kamala Harris, as we just heard in that SOT. Why isn't he listening to what his advisors must be telling him?
Well, his advisors are trying to tell him this, and I think yesterday you saw this clearly. They even placed groceries that consumers buy, Folgers coffee, cereals, all behind him, and he struggled to stay on message and on script, and instead he took some moments to go after Kamala Harris, when what the campaign wants him to do is, look, Americans are still feeling inflation. Yes, the rate of inflation is coming down, but they've struggled to explain that even though the rate is coming down, what Americans are feeling is that prices haven't come down, just they're not accelerating as fast. And what the Trump campaign wants him to do is attach Kamala Harris to that feeling that people are feeling right now, because it's not just Biden. She was the vice president for the past 4 years.
Yeah, and it's not just a feeling. Prices are very high. Like when we got the inflation numbers, even though they were better than expected, the message should be, hey, prices are still rising.
The level matters here. I mean, that's what people feel at the grocery store. We only have 30 seconds left with you, but of course you're headed to the DNC next week. There's some story on the terminals about cops vowing to really fend off havoc should there be protesters.
The protests are going to be amazing.
Yeah, what are you expecting on the ground?
Well, this is what a lot of people in the Democratic Party were fearing. Is this going to be a repeat of 1968? There are going to be protests. Protests have followed Kamala Harris and Biden across the country during their rallies, so you can expect them at the DNC.
They're fearing that it could be a repeat of 1968, and so they picked Chicago for the convention.
I think Chicago was picked before this.
All right, Anne-Marie Hord-Dern, we'll look forward to your coverage next week. She will be heading out there to the Democratic National Convention, and you can catch her every morning co-anchoring Bloomberg Surveillance as well. Still ahead, Rivian tapping the brakes on its Amazon delivery vans. We'll tell you why in today's Social Climbers. This is Bloomberg.
Jobs Day like Bloomberg.
All right, it's time now for Social Climbers. The company's making waves this morning. And first up, BioNTech falling after the vaccine maker announced that its vaccine candidate for the flu and COVID-19 that it was, of course, jointly developing with Pfizer, it missed on one of its two main goals in a late-stage study. Next up, another roadblock for Rivian. The EV maker is pausing production of the electric commercial vans it makes for Amazon thanks to a parts shortage at its factory in Illinois. Rivian said it expects to recover all missed production, but provided no timeline. And finally, Bryant Riley, the co-founder and largest shareholder of B. Riley Financial, is informally offering to buy the shares of the embattled investment firm that he doesn't already own. Riley is willing to buy the stock at $7 a share, according to a regulatory filing. And of course, you can follow all the latest company buzz on TRE and Go on your Bloomberg terminal, Matt.
All right, let's get a check at what's going on in the markets right now. We are about an hour into the trade, and the S&P 500 is flat. The NASDAQ down about 0.1%, but also moving closer and closer to unchanged. Coming up, online invitations innovator Evite is enjoying a 50% revenue jump year over year, but they have stiff competition, and will they ever go public? We'll talk to the CEO, president, I should say, and a foe next. This is Bloomberg. Since joining Evite 2 years ago, Anne Defoe has been on a mission to modernize the world's first online invitation platform. She's since taken over as the company's first female president, and business is booming. Evite has seen a 50% year-over-year revenue jump as it looks to stay ahead of its competition. And Anne Defoe joins us now to talk about this growth story. Thanks so much for your time. Is the industry in general just picking up? Do we no longer send paper invites?
There's definitely been a definitive shift where a lot of people are switching over to digital. It's a new way to actually invite people to your party. And even beyond that, since the pandemic, what we've really seen is there's a shift in how America feels about get-togethers overall. People now value in-person events. They value community more than ever before. And a good sign is, this past graduation season, we've seen the highest number of graduation events in our history. People want to celebrate these milestones. Another trend that we're seeing across America, millennials and Gen Zs, they're turning these low-key get-togethers into thematic events. Some trending themes are Taylor Swift, no surprise. Summerween is another trending theme. But what this is telling us is that people not only want to celebrate milestones, but they want to make these casual get-togethers even more special, which means great business for Evite.
And you think about the competitive landscape. There's Evite, there's Paperless Post. Those are the two big ones that come to mind. How do you compete? What do you offer, for example, at Evite that Paperless Post doesn't? How do you differentiate?
I think that's a very good question. Evite, we started with invitations. A lot of these competitors are in our invitation space, but we're thinking beyond that. It's the reason why we actually built a brand new tool. And this brand new tool is live on our site right now. It's called Evite Sign-Up Sheets. If you had an event that's catered around, say, potlucks, and you need people to sign up and bring an item, this is the tool for you. Right now, school is starting all across America, and a lot of teachers need parents to volunteer for their classrooms. This is the tool built for them. It's live on our site. It's the fastest tool on the market to actually get your sign-up sheet done. You could get it done in seconds, and it's absolutely free. And this is the way that we're starting to differentiate ourselves from our competitors, because we're building multiple products to actually help the community get together. We're building an ecosystem, a one-stop shop for all your planning needs. That's our biggest differentiator.
A company like yours, I would have said a few years ago, prime candidate for an IPO. Is that on the books? Is that not a great way to raise money anymore?
We never say never. I think that's a great question. But right now, we are heads down focused, and we're doing so well on serving our audience and our hosts and our community needs. America is partying right now, and, we're just trying to help America party. So as long as we stay focused and build a really durable business, I think we let this journey take us where we need to go.
And how do you scale up here? I know that Matt doesn't think that mergers exist. He likes to focus on acquisitions. Would you ever consider one of those, for example, either being bought or buying another company to kind of scale up here and grow even further?
Yeah, I think that's a good question. We consider all options. At the moment, we never say no to anything. However, I think we just have so much opportunity to help our hosts and build this ecosystem that we are heads down focused to help our users. And, one motto that we have around our company, how can we always be helpful to hosts? And if we keep that in mind, I think all the right things and the right answers will follow.
Paperless Post, I guess, is your biggest, I think the only competitor that I can think of. Is this essentially a duopoly? Do the two of you fight it out for total supremacy?
Good question. But I think Paperless Post is in a, slightly different strategic position than we are. We are still by far the largest online digital invitation. We are America's digital invitation company. We watch all of our competitors, paperless posts, including other competitors out there that are emerging. Of course we do, and we take interest in it. But we are by far the most dominant player out there, and we're building our own strategy like this ecosystem to solve host needs. So we feel very strongly where we're headed and where we're going, and with that we will remain the leader in this space.
When you're raising money, and I just wonder what it's like to be a woman in this business. I know the company was very happy to get you in there, and startups just have trouble attracting VC cash. I think less than 2% of VC money goes to female-founded companies. What's it like, in this growing tech business on the West Coast that has a kind of bro-y reputation?
Of course, I can't say it's completely easy. It's definitely tougher for women out there. But I think in more recent years, there's definitely been more support overall. And I think what's really, really helpful in this particular space too, our core demographics are moms. I'm a mom myself, so I think I have a competitive advantage in particular for this particular company. But overall, it's tough, but you weather through it and then you prove what you're capable of doing. And I think I have proven by leading this company to where it is and the growth that we've seen that, we could hold our ground.
All right, Anda, really appreciate you taking the time on this Friday morning. That, of course, is Anda Foe of Evite. Let's get a check on these markets. Of course, a little bit over an hour into the cash trading session. We're going to do that with Abigail Doolittle.
And stocks on the day, or at least the S&P 500, sort of wobbling between gains and losses. On the week, though, we have a really healthy gain for the S&P 500, up more than 3.6%, heading to its best week since November of 2023. What's interesting, though, if we take a look at this one-week board, these different asset classes, it's a mixed picture because we have oil. That's a risk asset, a signal on the economy. It's down 0.8%, so not confirming the gains that we're seeing in stocks. The 20-year yield down, that tells us bonds are rallying, at least the 10-year out is rallying. And that also speaks to a bit of a haven bid. So again, not really supporting the move higher for stocks if you think about things in an upside, or a right side world, not upside down as it is in terms of thinking about it around the Fed. And then interestingly, the dollar yen, after all of that big movement, this is one reason that we do have stocks higher, because that carry trade unwind, if there's more to it, there is reason to think that could be the case, certainly on pause. Now, if we bring Bitcoin into the picture, this is really very interesting. Bitcoin over the last 3 weeks down. This, of course, is a show more focused on stocks. So let's take a look at it, a proxy for it. Coinbase Global over the last 15 days, down 16.3%. If you think about Bitcoin and the crypto space as the new VIX in terms of a risk-on, risk-off signal, this is risk-off. So when you put all of this together, I would say that there's probably more volatility ahead. Volatility breeds volatility. Last hour is promising an NVIDIA chart, an update there. Let's take a look at NVIDIA, and I actually even forget what I put together. Well, these are the sectors on the week, and you can see the big outperformance for tech. Now let's take a look at that NVIDIA chart. You can see all sectors are higher, but NVIDIA right now, even though we've had this massive recovery to the upside, this is a daily chart, and what we're looking at is these trend lines, as I was mentioning. It's not to see the trend, it's to see the reversal. So the primary uptrend out of the 2023 lows has started to reverse. The secondary uptrend, it is being caught right now in between. The RSI is sort of in between overbought and oversold. Overall, Katie, typically this will be a reversal on 3 trends. So we see the shares weakening, even despite the massive rally this week into earnings on, I think, August 28th. Stay tuned. There could be some more volatility ahead for NVIDIA, where maybe for one quarter out of the last, 4 or 5, it's not the absolute blowout. Even very good from them could be disappointing. That may be what this chart is pointing to.
Back in July, Abigail, you were looking at the technicals. You told us NVIDIA shares were likely to go below 100, and I note they did actually close below 100 on Wednesday. I mean, intraday they dropped on a couple of different sessions. but what's the price action look like to you going forward?
Well, so that speaks to this reversal. So that primary uptrend reversed onto that low all the way down to 90. Now you have sort of Newton's third law, that equal and opposite reaction, back higher, some of the dip buying. However, we're hitting the resistance of that primary uptrend. Unless the buyers can really take it back above, let's call it, I don't know, 130 or so in a very convincing way, it suggests we're going to go back down toward the secondary uptrend, which is also below 100. There is a chance you could go higher and then below, but the bottom line is once you start to see an uptrend reverse like this, and again, it typically happens in 3 waves, it points to more selling ahead, which will be well below 100 at some point. That might not be on this earnings report, maybe early later this year or early next year, but this uptrend is certainly starting to weaken.
Well, you're right in that NVIDIA does report on August 28th after the bell, so obviously a crucial one if you take a look at the charts as well. Bloomberg's Abigail Doolittle, thank you so much. Now, coming up, traditional media struggles to keep up with the big tech players. Former CNN President John Klein tells us why it's an industry-wide problem next. This is Bloomberg. Time for our Wall Street Week conversation, and it's been a tough time for media companies. Paramount started the week announcing a fresh round of layoffs and ended the week as the possible target of a bidding war. David Weston asked John Klein, the former CNN president, about the recent drama in the media space.
It's a problem with the industry that they find themselves in, is what it is. And this goes way beyond just Warner Brothers Discovery. So, in their case, they've got to swim in the same waters as every legacy media company. They've got a lot of brands. They've got a lot of assets. The main driver of their profit has been the cable TV networks, TNT, TBS, CNN, et cetera. And just the raw amount of revenue available to cable TV-driven businesses has shrunk considerably. The other component of their business, the studio business, same thing, just the pool of money available for them and all of their competitors to make has shrunk. Subscriber fees that the cable distributors are paying have shrunk because viewers have left. So your monthly income on a per subscriber basis has plummeted. And as a result, also, advertising revenues have plummeted. And so, of course, you've got to retrench. You've got to make cuts. They're all doing it. You mentioned Paramount just began their wave of layoffs, their latest wave of layoffs today. And even Axios, which is a digital-only business, they've been through their biggest layoff in the past couple of weeks. So in general, media is really coming to terms with the reality that it's more than ever an industry dominated by the tech giants, the Apples and the Amazons, and certainly Google, which owns YouTube, which is a monster. The industry is dominated by those players, and there's just less opportunity for content creators.
So what do you do in that environment if you're running one of these big media companies? I mean, I think both of our experiences, it's awfully hard to cut yourself to success. You may have to cut, but it's hard to get to success by cutting. Often you then start to think about deals, and John Malone, after all, is the force behind the throne there at Warner Brothers Discovery. Are there deals that could be done, consolidation deals, that might make things better?
Well, you're going to probably look to your left and your right to see who's in the same boat. I think that was their original strategy at Discovery when they did the acquisition of Warner Media, was to get big enough that they could maybe be the biggest kid on the block and dictate the terms of other acquisitions and start doing roll-ups of other players. Now they're not the biggest kid on the block. And now their market cap has taken such a severe hit that the deal numbers themselves are going to be much smaller, but that's what's going to happen is consolidation for all of these guys. You have a new team coming into Paramount, David Ellison and Jeff Shell, who's so sharp. They at least have the benefit of beginner's mind. That is, they can look at that Paramount portfolio of companies in a fresh way, and they also don't have the legacy relationships inside the company, and they can maybe make some tougher decisions. But it's tricky moving forward. Warner Brothers Discovery is going to have to find consolidation partners, merger partners, and just last month in Sun Valley at the big media conference, David Zaslav was bemoaning the excessive government regulation in his mind, that prevents them from making mergers too easily.
So it's one thing to get bigger. People like to get bigger. What about also getting smaller in this respect? Netflix has done pretty well for itself with basically, if I can put it this way, a movie studio hooked onto a streaming service without all those pesky linear channels that you and I have worked with through the year. Is that a strategy? You say, let's double down on the production and the streaming, and let's get rid of the businesses or do something about the businesses that aren't going anywhere. They're not growing.
Netflix has had the advantage always of being a tech-first company that applied that technology to media content and distribution. At first, just distribution, and now they're in the content business as well. And their market cap is, 20 times that of Warner Brothers Discovery at this point. And so they've got that inherent advantage. The problem is that everything we're seeing today is the result of the impact of technology on content distribution.
That was former CNN President John Klein. Wall Street Week's David Westin joins us now at the desk. And, of course, you are also the president of ABC News. You have some experience in this sector. I thought it was interesting that he mentioned David Ellison and Paramount. They have a job ahead of them because now we have learned that Edgar Bronfman Jr. may put in a bid for those Paramount assets as well. What do we know about this business?
Well, what I know about that specifically is that there's a go shop provision. Actually, they had to go out and take other offers for Paramount, and the special committee is taking a look at those offers right now. And now, as you say, Edgar Bronfman has come in. He's been in this business before. So obviously the board has to go through carefully and review this as a fiduciary about what the best deal is. So we'll see where it all ends up. As I say, Edgar Bronfman has been in this business before, but also David Ellison has a pretty good reputation, at least as a movie producer.
I mean, this is just the deal that won't end. How long have we been tracking every sort of turn here? And at this point, what are they fighting over? When you think about the fundamentals of the business, I mean, Paramount began this week announcing it would cut 2,000 U.S. jobs. It reported a second quarter loss after writing down the value of its TV networks by $6 billion. I mean, this is a really struggling business and a struggling, difficult industry.
Yeah, by the way, Warner Brothers Discovery also wrote down the value of their linear channels because they're recognizing what John Klein was just talking about, which is they just are not worth what they were paid for originally. You've seen this in the media business before, maybe not this dramatically, where there's a cost structure built up for a certain revenue stream. The revenue stream shifts, and all of a sudden you got to cut the cost structure. I mean, broadcast had this with cable because they built up a really big cost structure, and cable came along, started competing away some of the advertising revenue, as well as adding subscription revenues. They had to cut the heck out of the cost structure. And by the way, I had to do some of that myself.
I'm sure it was unpleasant, as it must be for Zaslav as well. Who are, the takeover prospects? Who's going to get together with these companies?
I think there are two questions there. One is, do they get together? I mean, I wouldn't be surprised to see a John Malone, for example, try to do something with Paramount and try to put together the streaming services of now called Max, giving up the HBO. I'm not sure about that, but giving up that and making it a Max.
Giving up the most important brand in media.
Yeah, certainly one of the most valuable. That's exactly right. But anyway, you could put some consolidation, but you have to think carefully. How often in history have you taken two weak businesses and put them together and made a strong business? That's usually not the way it works. I think the bigger question that John Klein was pointing out that I find very interesting is it really all up to the tech giants at this point? Is it all up to Googles and the Amazons? Because they have all the data. They also have other ways to make money. And so you leave the legacy media companies really going almost hat in hand to say, please help us out here some. And so, listen, the most successful media brand right now probably is YouTube.
Yeah, there you have it.
Right?
David, we have to leave it there. It is great to see you. That, of course, is David Westin. Of course, tune into Wall Street Week tonight at 6 p.m. New York time. This is Bloomberg. Well, leveraged single stock ETFs have boomed in popularity this year, and Defiance, a $1.4 billion asset manager, may have launched the most volatile fund yet in the U.S. Joining us now is James Seyffert of Bloomberg Intelligence. And of course, we're talking about 1.75 leverage of MicroStrategy, which is already kind of a leverage bet on Bitcoin. And I know that the Bloomberg Intelligence view is that these are trading tools. They aren't supposed to be held long term. But how much confidence do you have that people actually are treating them as they're supposed to be treated?
Yeah, so the benefit is we can see how much these things are trading, and they're trading a ton. So there's no way to know if there's some people out there that are just holding this long term. But for the most part, these single stock ETFs, they're being largely used as they're supposed to. But it's over a $30 billion industry right now, and these things charge a lot of money. So it's good for these issuers.
Where are you seeing the flow? What have the flows been telling us this week, James? I've always found that's one of the most interesting and important functions of ETF Go on the Bloomberg.
Yeah, I mean, right now, the money is, well, specifically with these single stock ETFs, the flows are going to these really high volatile names like MicroStrategy, names like NVIDIA. There's one NVIDIA fund, NVDL, it's over $5 billion, and that is the number one leveraged single stock ETF out there. But essentially, it's anything that has a lot of trading, a lot of controversy, Tesla, you name it, things like that. Those are the names that are going to get a lot of the flows.
All right, James Seyffert, really appreciate your time. That, of course, James Seyffert of Bloomberg Intelligence. And because of special coverage of the DNC next week, ETF IQ taking a break, but you can catch me the Monday after, the 26th, 12 p.m. Eastern. It's a great show, Matt. I don't know if you've ever watched ETF IQ.
In fact, I have co-anchored that show for quite a long time, but I'm happy to leave that duty now to you, Scarlet Fu and Eric Balchunas, and I watch it every Monday.
As you should. Best 30 minutes of Bloomberg TV. Let's take a check of markets right now. Of course, the end to the week. You can see the S&P 500 down about 0.2%. The NASDAQ 100 down 0.3%. The bond market just about flat. Of course, whipsawing today as we get that back and forth data, Matt.
All right, coming up next week on Open Interest, join us in the C-suite where we will be joined by the Lifetime Fitness CEO on Monday as they announce the perfect new pickleball. Then Edbridge CEO Greg Abel on Tuesday. This is Bloomberg.
heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, chips in focus as equipment maker Applied Materials, it disappoints on its forecast, while Texas Instruments scores cash from the CHIPS Act.
Plus, Epic Games launches a new mobile storefront after years of legal wrangling with Apple and Google.
And Seagram heir Edgar Bronfman Jr. is close to making a rival offer for Paramount. Is a bidding war brewing? But first, let's check in on these markets because it is a good week. Ed, if you are long these markets, the Nasdaq 100 having its best week in the year. Since November, we're up almost 5%. That is a cool $1.3 trillion being added to the overall benchmark. And it is a significant, well, sigh of relief post-volatility of the last couple of weeks. Once again, we got some consumer data just showing sentiment is on the up-to-date. It counteracts some of that weakness in the housing data on the day. Look, we're just down a little bit on the day, but it is a strong week. What were you looking at on the micro, Ed?
I'm going to go straight to Applied Materials, and a company that makes the machines that make the chips. It's down 3%, beat in the quarter gone, but there were really high expectations in its forecast for the current period where the market wants to see that all this investment around AI in particular is translating into more equipment or chip manufacturing equipment investment. We'll get to that in just a moment. The other top story in the semiconductor space, Texas Instruments, set to receive $1.6 billion in CHIP Act grants and $3 billion in loans, the Biden administration announced today. It marks the latest major award from the program that's designed to boost American semiconductor manufacturing. We're joined by Bloomberg's Ian King here on set in San Francisco. A lot of the money's been allocated. Texas Instruments makes all kinds of more basic chips. Just the terms that they've agreed with the administration here.
Yeah, I mean, the way to look at this is nothing is set. A lot of money has been promised, but from a taxpayer's perspective, it's like, okay, you have to do this, you have to go into production, you have to build this, and then we'll give you the money. So that's the way to look at it from a general perspective. The flip side of it, Wall Street is like, this is how many dollars, how many cents on the EPS that they'll be gaining, how much less CapEx they'll be spending.
Still, they are spending a lot. And it is all about the focus on chips at the moment and the focus on AI. Just take us back to Applied Materials for a moment, Ian, because, look, the numbers were good, but the forecast perhaps just not living up to the AI euphoria.
Yeah, I mean, there are two things going on here. Anything that's to do with high-end logic, which is for data centers and by extension AI, is doing really well. There's a lot of demand for that. On the flip side, some of the types of chips that, say, are for automakers or for industrial equipment, there's not a lot of strong demand growth there at the moment, so perhaps machinery orders for that particular sector are a little bit weaker. There's kind of a balance of factors going on there.
That automotive part's kind of consistent with NXP, that we've heard it on an ongoing basis. Just real quick, what's the difference between Applied Materials and ASML? You know, if you think about what those machines are actually used for.
Yeah, I mean, think about Applied Materials as much more generalist. They make a whole range of different pieces of equipment. ASML is very specific. It's making lithography. They're essentially the lasers that are burning the holes to make the pattern on the chips. Applied Materials is putting materials on those silicon wafers.
Bloomberg's Ian King, thank you very much. Let's take a closer look at chips globally. Japan is applying foreign trade regulations to chip-making equipment as part of its effort to secure stable supply chains, the Ministry of Finance said earlier today. Foreign investors are now required to give prior notice when conducting direct investment in equipment tied to chip-making. This in an effort to address the risk of key technology leaks. An interesting global story, Karen.
And so much going on with chips. In fact, overall, they are weighing on the overall benchmarks today because of that Applied Materials number. Just get a broader look at the tech market right now. Janet Muir is with us, RBC Bruin, head of market analysis. And Janet, we've had an extraordinary few weeks, to put it bluntly. What are you making of AI euphoria reality and what it means for the tech benchmarks right now?
Hi, good morning, Caroline. Thanks for having me. I think one thing is that the valuations of some of these mega cap stocks and AI exposed stocks have come down. I think that is good news for investors who are not invested yet. They can actually get in with a better valuation into companies that still have great long-term prospects. And I also think that the rebound, the very quick rebound that we've seen, suggests that, if the data is okay, continues to suggest that the U.S. economy is still growing, there's still a lot of demand for these high-quality stocks. And I would say our position would be to keep being focused on high-quality growth companies, which a lot of these AI-exposed stocks are. And I think some of the observations from companies' guidance, from the big tech companies, for example, is that they prefer to actually spend more on AI instead of being left behind. So I think that this is still very much a very important trade.
Why then was everyone suddenly so nervous around it, Janet? Why do you think that, we're still 12% off of our highs on the SOX index, but why haven't we managed to rebound to the extent that has your level of conviction?
Yes, I think, so generally speaking, a lot of focus is still placed on the economic data. We got some relief, I think, in the past week or so with solid economic data and slowing inflation, but I think there's still uncertainty surrounding that. I think particularly for cheap companies, I think the politics of that still play a pretty important part. I remember when ASML report, and then there is this suggestion that Donald Trump is going to make it stricter for U.S. companies to export high-tech equipment and things like that. And also, of course, the Biden administration tightening the stance. I think these are still ongoing concerns. So I think that is the reason why the chip makers are not bouncing back as much as the other weather stocks.
Janet, hi, it's Ed in San Francisco. I've been reading your research and you've been thinking about REITs, real estate investment trusts. So have I. And I've been writing about how you can look at their pipeline in the context of data center investments. I didn't realize it was such a focus of opportunity for some of the REITs out there. Is that an area that you look for data sets to kind of work out how long this investment cycle has to run?
Yes, I think in terms of REITs, I think data center is one of the more resilient areas actually throughout the previous sell-off. I think that is still a very valid investment point. But what we're looking at in terms of REITs is basically broadening out of the other REITs area because simply the valuation has gone much more attractive. And I think particularly right now we're at the stage where the Fed is going to cut interest rates, and expectation is building that there will be further cuts well into 2025 and beyond. So I think REITs being a very interest rate sensitive sector is likely to benefit from this monetary policy development. And I think the valuation is just adding to that attractive thesis.
Earlier in the show, Caroline was looking at the NASDAQ 100 on the weekly basis. We've had a lot of conflicting economic data. What has the data all told by Friday afternoon told you about the state of the global economy?
Well, I think everything is still fine. I think the labor market is obviously slowing down, but it is actually as expected. And in fact, it is a trend that the Federal Reserve would like to see. If you look at the job openings per unemployed person, it is going down, but it is basically what I would describe as a normalization back to where it is pre-COVID. So I think this is all positive development. I think we're seeing a slowdown in consumer because the savings are being depleted. But I think the key thing is that real wage growth is very much positive. I think that is a very fundamental supportive factor out there. So overall speaking, the economy is still fine, slowing, but as expected, and we're not seeing the economy falling off a cliff. And soft landing is still very much in play here.
Janet, what is then the most important piece of data in the next few weeks? Is it Fed macro? Is it August 28th NVIDIA results?
Yeah, NVIDIA is definitely a very important corporate earnings. I think, that would be a very important point for us to watch. Basically, we know the volatility around that event and the ability to actually spill over to the rest of the mega cap industry. And also, investors will be seeking validation on whether that AI orders is still very strong. And of course, I think any data that relates to the labor market will be a big focus. I think inflation side of things, we got more confirmation that is okay and unlikely to see volatility around inflation. So I think labor market data for sure.
Such a good question by Caroline, though. August 28th, NVIDIA, a macro level event, maybe. Janet Mui, RBC Brewin, Head of Market Analysis. Great to have you back on the show. Thank you very much. Now, coming up, we're going to be joined by Josh Chapman, who is a managing partner at Convoy, a firm focused on the video games industry. And we're going to discuss Epic Games' new mobile storefront, which is out today. By the way, heading to break, we're looking at shares of Rivian. I broke this story overnight with Kyle Porter that they've had to pause the line that makes the delivery vans for Amazon due to a part shortage. The stock declines have really accelerated in the session, almost 3%. It won't affect long-term their production targets. They'll make that up. They're not changing guidance, and all the workers will be paid, etc. But it's interesting that this continues to be an issue in the supply chain for Rivian, such a closely watched EV name. Keep tuned, stay tuned. This is Bloomberg Technology.
Epic debut for Epic Games. The Fortnite maker is launching a new mobile storefront after 4 years of legal wrangling with Apple and Google over their App Store practices. Now, the Epic CEO is saying it may have lost up to $1 billion in revenue after Fortnite was removed from Apple's App Store when Epic tried to circumvent that fee with its own storefront back in 2020. Joining us now, Josh Chapman, managing partner of Convoy. And look, it's returning to iPhones in Europe, to Android devices worldwide. Can people get it, access it? What's the pickup?
Right now, you can only access the Epic Games Store in the EU if you're on the iOS and globally on Android, as you mentioned. It is an absolute pain to download on both stores. So Apple and Google are fighting this tooth and nail. I just watched some videos that came out this morning. We're going to be trying it all day today. This is requiring anywhere from 10 to 20 steps. There's lots of flags and alerts on both phone devices saying, hey, are you sure? Are you sure you want to download this? So these stores are going to fight this tooth and nail.
An Apple spokesperson clarified to Bloomberg that it is a 5-step process in Europe at least, not 15. I'm glad to have you on the show, right? You're a firm that invests in video game startups that want to disrupt the industry. That's what Tim Sweeney's trying to do. The argument that if you have more stores, you have a more competitive market, $180 billion video games market, half of which is mobile. Is he right about that argument?
He is right that it is better for the games industry if there are more stores, more options, and more competitive pricing. That said, I think what he's fighting for is fantastic and will be positive, and this development today is positive for the games industry. That said, Apple is well within their right, having the platform they've built, to defend it as much as they can. And so the courts of the U.S. have decided that, yes, they're not a monopoly, but they have to allow for third-party payments to be processed. Essentially, the way I read that and the way we read that as a firm here at Convoy is that, that's kind of a meet in the middle, right? Let's let them do off-platform payments, but you're not a monopoly and you got to let Epic Games launch a store on your app store.
I mean, the reason that this is happening for iOS in Europe and not here is because of the Digital Markets Act and the fact that Europe's decided that Apple is acting as a gatekeeper in some way, Google too, with these app stores, and they've got to change. But quite often what happens in Europe ends up happening here in the US. So if you're saying they're pushing and fighting tooth and nail, will we ever see it occurring here in the US unless there's our own antitrust issues that are set to bear here?
So it took about 4 years to get to this point just in the EU. So I think that we're looking at another, just a prediction, 3 to 5 years before we see this really happen in the United States, unless a huge ruling comes down from the Supreme Court in the United States if they decide to take this court and take the appeal, which they rejected, I believe, earlier this year or last year. And so I think we're looking at a very long, drawn-out battle. And in the meantime, Apple is making billions and billions a week off of the App Store. And about 60 to 70% of all revenue on Google's App Store and on Apple's App Store comes from the video gaming space alone. And so the reason why they're fighting,
Well, let me just jump in, and Kara, I'm sorry about this. We're talking about that Apple side of the story. Let's be under no illusions. Epic want to make money from this arrangement, right? They have the target of 100 million downloads by a certain period of time. Ambitious. Will they be successful is the question.
I think Epic Games is going to make a lot of money off of this move today. I think they'll make it primarily through Android globally. And then I think they'll secondarily make it on iOS. I think it'll be in that order of magnitude. But Epic Games, as a private company that owns Fortnite and Rocket League and Fall Guys, they have now recently launched UEFN, which is basically their Roblox competitor. They watched Roblox have success, so they're launching their own sort of user-generated content platform. This is a continued effort for Epic Games to increase their margin profile. Mobile is a perfect way to do that. And whether that's an acquisition or an IPO in the future, Epic Games is playing their hand very well, and this will work out in their favor for sure.
I think the data showed that some 35 million people played Fortnite for more than 600 million hours in July on Xbox and PlayStation. Just give us a context of how popular Fortnite is compared to the rest of the gaming landscape.
Before Fortnite was kicked off the App Store, we as a firm did an estimate that Fortnite was responsible alone for almost 1% of all revenue on the Apple App Store before it was kicked off. That was sort of an estimate that we kind of did internally. The significance that Fortnite is as a title on console, which you just mentioned, is absolutely massive. And on mobile, which is more accessible globally around the emerging market countries especially, which is why Android's important, Fortnite is one of the top 5 forever titles. We call them forever titles in the gaming industry in the world, right? Alongside that is things like Call of Duty and Grand Theft Auto and many others.
Josh Chapman, managing partner at Convoy, a particularly great voice to have on a day like today. Thank you very much. There's another big story in the world of entertainment. We're looking at Paramount. Seagram heir Edgar Bronfman Jr. is close to making an offer for Paramount Global, setting off a potential bidding war for the film and TV company that owns CBS and MTV. Let's get to Bloomberg's Hannah Miller. And Hannah, I'll say the same thing to you I said several weeks ago. I'm confused and I have deja vu. So there's a new bidder and then another bidding war. Good morning.
Yes, good morning. We know Bronfman has been interested in Paramount for a while. And things have shifted since then. Obviously, there's the Skydance deal that has been agreed to, and that there's this 45-day go-shop period. So it looks like Bronfman is going to put in a bid. But unlike his earlier interests, he's no longer working with Bain Capital on this and has been in discussions with a couple of different entities, including Roku, Fortress, and the film producer Stephen Paul.
So I'm sat here as a B-class shareholder, not voting, trying to work out what ultimately is going to be better for me. How does he push away from what David Ellison is going to offer in terms of technology, in terms of studios? How is he going to make a different kind of appeal?
Yeah, so, Bronfman is coming in with years of experience in the media industry. He's arguing that this is a better deal for shareholders. He is saying that he can take this company to the next level and putting this potential bid together. But it'll be interesting to see what happens. Ultimately, it's up to Sherry Redstone. Her holding company, National Amusements Inc., is the biggest shareholder in Paramount. And what she says goes. If she prefers Skydance, that's what it's going to be.
Hannah Miller, telling it straight, we thank you so much. When we're coming up, we're going to talk influencers influence the selection cycle with LTK co-founder Amma Vensbox. Stick with us. This is Bloomberg Technology. Let's talk politics and creators, because as the election campaign picks up, the creator economy has been on the administration's mind. 200 content creators will be credentialed to cover the 2024 DNC in Chicago next week. This follows, actually, the White House itself hosting the Creator Economy Conference, where it convened a group of digital creators and professionals to discuss the industry's most pressing issues. Let's talk about it with LTK co-founder, President Amma Vensbox, who you weren't there yourself, but a lot of the influencers that you represent, that you help monetize, were there. Why is it important? Why are we seeing such political interest in the influencer economy right now?
Well, our LTK team was on the ground. They were there. And, when I think about creators and politics, I don't know of any better marketing machine than the RNC and the DNC. And what we're seeing is that even government is realizing that in order to reach people, you need to be where they are. They're spending 6.5 hours a day on their phones. They're in these aggregated content channels. The content that they're viewing is created by creators themselves. The new media has arrived. It's here. And it was hugely validating for the Creator Economy Conference to be held at the White House. This is an industry that we started 13 years ago. The word influencer was only added to the dictionary 5 years ago, so we've come a long way. This was a really big moment for our entire industry.
Amber, can I get political with you for a moment? I don't want anyone to take sides, but just from a perspective of a creator, an influencer, who's doing it better at the moment? Who's managing to reach the US voter base via influencers most efficiently? Is it DNC, Democrats? Is it RNC, Republicans?
You know, both are using these tactics, and they've both used them for the last several elections, and we've seen it across all of the different platforms. That said, I think really this is important for the entire industry, whether you are someone who, as a creator that is following politics, who is reporting on politics. It's a validating moment, and for some creators, they don't want to touch the elections at all. Okay. But I think what this points to in this moment is that they're looking to see that this industry is important and that they need to be thinking about the things they're thinking about. And there are definitely a handful of things that are top of mind that we showed up in Washington to talk about.
What are the protections here for voters that creators, as we are calling them, get it right, that it's accurate, that it's not false or fake information?
Well, you know, for our creators, Joe Biden stood up and he said, you know, you are the new media. You're the new way that people are being reached. We know that people are not just listening and thinking about sentiment, that they're actually acting on the things that their influencers that they follow are telling them. We're seeing that, you know, consumers are buying $5 billion worth of products from these creators every year. So they're voting with their wallet and not just with their mind. So there's a huge responsibility that comes from being a creator, and the acknowledgement that this is the new media is one of the most important things. As a creator, there are really three key things that are top of mind when it comes to politics. I'd love to share that if you guys are interested.
Just 15 seconds, just go.
Wonderful. Well, we're thinking about the content that's taken and monetized directly and indirectly and without a license, without permission or benefit to that creator. We're thinking about the implications of creator content being taken to train AI, again, without the license, permission or benefit to the creator. And then I think finally, it's really important that this industry was built on innovation. How are we protecting the innovators who are creating it? And that's really in the court system, through legislation. Thank you so much.
Okay. LTK co-founder and president Amber Bensbock. Sorry we ran out of time, but thank you for coming on the show. Coming up, we're going to take a deep dive into software company Autodesk's somewhat controversial sales strategy. That's next. This is Bloomberg Technology.
On Bloomberg.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. I want to go back to the chart you showed at the top of the show, the NASDAQ 100, but on a 5-day basis. We're actually on track for a second consecutive week of weekly gains. But 5% over 5 days is actually the biggest weekly gain on that index since November of 2023, and it's amazing how the narrative changes. It was just 2 weeks ago that we'd had 4 straight weeks of declines, and we were perilously close to a 5th straight week of declines, going back the worst run since 2022. Economic data is really whipsawing us about, and as you pointed out, August 28th and NVIDIA earnings is this macro level event. There's a really big story out there in a specific mover. Autodesk continued to use a controversial sales strategy after promising investors it would stop, and then ignored internal warnings about the risks of doing so, according to previously unreported internal documents. The reporter with those documents, Bloomberg's Brody Ford, this is so interesting. So basically, management had been told, don't use this, there are risks. They carried on using it, and you found out about it. Take us from there.
Yeah, taking a step back, in April, Autodesk said, yo, we cannot file our financial disclosures. We'll come back to you. And the whole market said, oh my God, what's going on here? This is unheard of for this size of a, publicly traded company. Eventually they said that, yeah, we had some problems with these deals, but it was still somewhat vague. And so what we found out through these documents is that Autodesk pledged to stop doing a specific kind of deal that essentially front loads the cash flow. I'm not going to bore with the details, but they kept doing it quietly. And the reason they kept doing it is because they were reliant on these deals to meet free cash flow targets, right? We see in these documents that employees warned executives, hey, this might hurt our long-term revenue. This increases the chances of us making a serious mistake, maybe like the one we saw earlier this year, but they pledged on because, you got to meet those financial targets.
But this had big ramifications. The accounting probe finished in May. The board decided to remove the Clifford as CFO. I mean, what more could they do to make everyone take this seriously?
Correct. Yeah, they removed the CFO. The board decided that a little bit earlier this year. And since then, activist investor Starboard has entered the stock, saying in part the handling of this probe was not good enough, that investors didn't get enough accountability. They didn't really know what happened. How wide was the pool of knowledge here? And again, what these documents show is that the pool of knowledge was quite wide. I mean, we see executives signing off on these deals saying that, hey, we got to meet these targets, let's pursue them. In terms of ramifications, Starboard is requesting things like considering whether the current CEO is still the right guy for the job, as well as the kind of traditional activist stuff like let's raise margins and, all that kind of thing.
Brody, real quick, and forgive me this one, just the basics of what Autodesk is and does and why people might or might not know it.
Totally. Autodesk is like Adobe for the physical world. That bridge behind you, probably Autodesk was used in some capacity to design it, right? Most buildings you see, their software was designed for. They have a very interesting vertical that they really own. It's one of those kind of large software markets you almost don't think about because they are so entrenched in their market. It's a very interesting set of products they offer.
Bloomberg's Brody Ford with another top piece of reporting, Caro.
Yeah, absolutely on it. Meanwhile, just switch gears, Ed. We're going to look at fintech for a moment because Revolut said that a secondary share sale that allowed it basically to give employees some liquidity for their stakes valued the company at, get this, $45 billion. The new valuation for the UK unicorn is up from $33 billion price tag that it received back in 2021. And actually, that's the interesting point here. Unlike many of its rivals in fintech, Revolut hasn't had to raise money since then in recent years. And it's allowed it to basically avoid those sharp declines in valuation that many peers have suffered. But at the same time, let's go to another peer. Let's go to a European fintech that's seeking liquidity, and it's Klarna, and it is inching ever closer to its US IPO next year, with sources saying that the company is seeking a valuation of around $20 billion. Now, the Klarna CEO joined Bloomberg Daybreak Europe earlier today to discuss those plans and his outlook for the company. Just take a listen.
people really appreciate mostly about Klarna is that 2 years ago, this business was, very much attractive, growing fast in the US, but also loss-making. And in just 2 years, we have increased revenue by 50%. We have increased gross profit by 100%, and we reduced cost in 30%, which means that now we are, profitable. And I think those kind of financial performance obviously do raise the eyebrows a little bit with investors. Also, as we have, due to AI, committed to continue shrinking the company. We've already gone from 4,500 to 3,500 in the last year, and we are committed to continuing on that path, not by layoffs, but simply by natural attrition rates.
You've been an early mover on Gen AI. You reached out to Sam Altman of ChatGPT, OpenAI, pretty early on in all of this. What's been one of the most surprising things that stood out to you as you've embedded some of this Gen AI across the business?
Yeah, I think that it is, to me, in a way, I would actually partially say that, like, I was even, kind of pulled into the hype a year ago, where a little bit like, again, self-driving cars, we used to read about them in the press every day, and then you would look out the window and like, where are they? Where are they? It's not happening. And now it's actually happening. And I think that, like, to some degree, I was almost like drawn into the hype a year ago as well. It's like, okay, in the year, the whole thing will already have like totally dramatically changed everything. And now you almost have the opposite. You hear people like, oh, we tried, it didn't give us the results and so forth. But internally, what I'm seeing in Klarna is that it is working. It's just, it will take a little bit further time before it will have the full implications. To us, we've already had delivered some fantastic results, but we're super excited what's coming in the next 12 months.
Before we let you go, Sebastian, look, what do we win you back? You're going to list in the US. That's the suggestion. That's the expectation. What does Europe and the UK need to do? Is there anything they could do to win this listing?
Well, one thing that I have said to regulators in the EU, because there's been so much discussion in Brussels as well, how do we create a competitive market? And I have suggested, and I actually got some positive from some of the foreign ministers. I was invited by all the finance ministers of EU, is that I think that if Europe will never agree on, like, where should the big stock market be? Is it Paris? Is it Frankfurt? Is it whatever European country? So the only way to actually get this to work is if you would mandate all the stock exchanges in Europe so that any stock that gets listed in one is automatically traded in another. I think that could reach the critical mass to create an investor base that is, similar size to the one we see in the US, because that's really one of the biggest challenges when you make those comparisons. If a company like ours is already mostly US business from revenue size, it will have to be a similar size of investment base and stock market size to make it a relevant listing point.
That was Klarna CEO Sebastian Szymiatkowski. Coming up on the program, we're going to be joined by Hiba Anwar from the Ericsson Immigration Group to discuss the impact of the election on H-1B visas and, in turn, the world of technology. Karen.
I just want to go back to that question of dual listings and what certain nations and territories have to do to woo over other companies. Because get this, AvePoint is a New Jersey-based company, software company. It's considering actually a second listing outside of the US in Singapore. People with knowledge of the matter have been saying it would be a deal that basically would bring US infrastructure software firm a step closer to some of its big backers. Remember, they had a big chunk of change from Temasek. This is Bloomberg Technology.
the H-1B visa policy is really critical for the tech industry, and Trump does not have a positive track record there. So I think having a president who understands the importance of immigration in this country is really critical.
Venture capitalist Shruti Shah, one of the signatories of VCs for Kamala Group, supporting the campaign of Kamala Harris. And as we look ahead to the DNC that starts next week, H-1B visas, are they going to be a topic that's top of mind? They certainly are for the tech industry. Let's bring in our next guest to discuss. Hiba Anwar, partner with the Ericsson Immigration Group. And I ask you there, Hiba, will we get much clarity? Do you need more clarity from the position of the immigration from the Democratic ticket?
So I think that the companies that operate in the tech industry, as well as the AI industry, semiconductor, basically any industry in which the United States wants to be a global leader and continue to dominate, they're definitely looking for a lot more clarity when it comes to what the next president's policy is going to be with respect to high-skilled immigration. And the reason that this is so important for companies, particularly in the tech sector, is because there is a heavy reliance on visas like the H-1B visa, because when it comes to employees who have the necessary STEM skills that these companies are looking for, demand still very much outweighs supply. And so whoever the next president is going to be, it's really, really important to point out that what we really need for the success of the tech industry and other industries is an immigration policy that actually reflects a 21st century economy.
Hiba, former President Trump actually gave some detail on how he'd approach visas, particularly those originating from students of US universities, on the All In podcast, and then he discussed it with Bloomberg in July as well. Have you had any detail or sense from the Harris ticket on a specific approach to technology-relevant visas?
So what we know about Vice President Harris is that she definitely has close ties to the tech industry. There were 200 tech leaders who came out and endorsed her publicly. Now, as you mentioned, the DNC is right around the corner, so we're definitely going to learn a lot more here in the next few days. But, you know, what most people are expecting of Vice President Harris is that she's going to continue President Biden's approach to high-skilled immigration. And President Biden's approach has been in large part walking back Trump-era policy.
I wondered if we could sort of take a bipartisan look at the mechanics of getting a visa and the federal administration of visas. I got my first visa in 2018 under the Trump administration and had to renew it in the chaos of COVID. But how easy procedurally is it now in this state right this moment to get an H-1B?
So it's not necessarily as difficult as it was during the Trump administration. The experience that a lot of immigration practitioners had during the Trump administration was that the process was a lot longer and it felt somewhat inefficient. I think that that's why it's really important to watch what the results of this election are going to be,